Prepare the BLUC account in the books of Marvin. So the following transactions related to the account of BLUC took place. He is one of the Marvin's customers. So let's prepare the BLUC account in the books of Marvin. Okay. So BLUC account, he is also one of the trade receivables. BLUC account. Okay. So DR and here CR. Now the pounds, okay, we write that value of the currency at the top. We know that this is also a trade receivables account, so let's prepare that. So you should be aware any paid slash prepaid pay will appear on the debit side for this, and any owed, okay, balances will appear on the credit side because this is a trade receivables account. So the 1st April, okay, the Marvin, there was a balance brought down was 420. So let's write that. So the owed balance was, okay, balance brought down on 1st April 2022 slash D, okay, it was 420. Then he on 18th April he sent a check to Marvin. Okay, on 18th April a check was sent to Marvin. So the amount was 420. Then on 20th April sold goods to BLUC, credit for 120. So some sales happened, so the sales were, credit sales were 120. And then on 28th April the check sent was called as dishonored by the bank. Probably he didn't have money in his in the BLUC account, and so the bank declared it as dishonored. Dishonored check. Okay, so the amount was for 420. Then on 30th April it was declared as irrecoverable. So it was transferred to irrecoverable debt account. Okay, so this is going to be transferred to irrecoverable debt. So the amount that was transferred will be 420 plus 120. Okay, this was some owed, already owed, and this was also sold. So the total amount that will be transferred to irrecoverable debt account will become 540. And then it is going to be transferred to income statement. So you'll close down that account. Okay, so now let's write this. So the total will be 420 plus 420 plus 420, that will be the amount will be equal to 960. Okay, so add up all this, so it will be 960. So 960, and this side also 420 plus 540, it will become 960. Now this is, you have to close down this account because that's what happened. Then on 25th May, later on in the he offered 0.25 pounds. Okay, he gave. So where will you write that? So 0.25 pounds on. So in the same account you will open and you will write. So there was a bank and it was around, he paid 0.25 0.25 times 540, so that was equal to, that is going to be equal to, so it's going to be equal to 135.25 times 540, and this one you are going to transfer it on this to the irrecoverable debt recovered. Okay, so you will transfer it to irrecoverable debt recovered. Okay, so here also you are going to say that it's a closing account. You will transfer it to, you'll open the recoverable debt recovered account on that day and then transfer it to the income statement. Okay, so this is how you will do the account, and then you close it down by putting two lines underneath. Okay, because you are going to close down this account. And then we have evaluate whether it is ever possible for Marvin to avoid all irrecoverable debt. So yes, Marvin could avoid all irrecoverable debt if he sold only for cash. Okay, if he does only cash sales, then he will not have any problem. There will be no irrecoverable debts because there will be no credit sales. And also, what if he puts a good credit control policies in place, like he is able to remind the customers on before the due dates, and also if he gives some cash discounts for early repayments and stuff like that, then he will not have any irrecoverable debt. But however, we can see that not all customers will like to do any cash sales. It means he might lose out on some customers. He might also incur some costs, or he might lose on profits because if he is offering cash discount. Okay, and still customers might not pay back if they don't have money in their account, or if they are bankrupt. So in conclusion, you can say Marvin cannot avoid all irrecoverable debt, so he should have a good credit